Does collecting safe, growing, totally passive dividend income sound good to you? How about seeing that dividend income grow all by itself? Want to know about stocks that just boosted their dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. Dividend growth investing is such a fantastic long-term investment strategy. It practically sells itself. After all, we're talking about owning stock in world-class enterprises that pay their shareholders reliable rising dividends. What's not to love about that? What is there to complain about? Collecting totally passive dividend income is awesome, but dividend growth investing kicks it up a notch. Because we're talking about collecting totally passive dividend income that's increasing all by itself. That's right, dividend growth investing is all about investing in businesses that are routinely increasing their dividends. That means passive dividend income that's growing like clockwork year in and year out, which certainly helps in a world where inflation just about guarantees higher prices on everything over time. Today, I want to tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase you should know about came courtesy of CASY's General Stores Inc., stock ticker CASY. CASY's just increased their dividend by 2.9%. I know 2.9% isn't much, nothing to write home about. Or is it? Let's just keep some perspective here. This is more money. Not only that, it's more money for doing absolutely nothing other than holding stock in a company. That's the beauty of dividend growth investing. Hold shares, get paid, then get pay raises, which results in you getting paid even more. Gotta love it. This is the 22nd consecutive year of dividend increases for the convenience store company. This latest dividend increase is a continuation of a dividend deceleration theme for CASY's. Their 10-year dividend growth rate is 12.2%, and their 5-year dividend growth rate is 8.8%. Then there's this dividend increase at near 3%. The deceleration in dividend growth isn't something I'm very keen to see, especially since the stock only yields 0.7%. On the other hand, this dividend is extremely secure. The payout ratio is only 16.8%. Meanwhile, this stock has been a very strong long-term performer. This stock is up 320% over the last 10 years. Long-term shareholders should be highly pleased with their investment in CASY's. They've done well. That said, I personally like to see a lower valuation and higher yield here in order to compensate for the recent slowdown in growth. Most basic valuation metrics like the 23.3 price-earnings ratio are admittedly roughly in line with the recent historical averages. It's just that a 10% or so pullback would make more sense of the numbers. But if a pullback does come, this is an interesting dividend growth stock to consider. The second dividend increase I want to tell you about came from STOR Capital Corp, stock ticker STOR. STOR Capital just increased their dividend by 6.9%. Yep, almost 7% more completely passive dividend income. Go to bed, then wake up the next day to more money than you were getting paid before. It just doesn't get any better or easier than that. This marks the 7th consecutive year of dividend increases for the Real Estate Investment Trust. The triple net retail REIT continues to deliver. This dividend increase is exactly what I was expecting from them. Their 5-year dividend growth rate is 9.8%, but I think mid to high single digit dividend growth is an accurate expectation here. And that's plenty when you consider that the stock also yields 4.1%. I mean, you're talking about a yield and growth combination that's well into the double digits here. And the payout ratio is manageable at 79.8% based on midpoint adjusted funds from operations per share guidance for this fiscal year. This is one of my very favorite REITs. I've highlighted this name a number of times on the channel. They continue to steadily grow the business and the dividend, all while offering a market-smashing yield. And the valuation isn't unreasonable at all. Based on the aforementioned guidance, we're talking about a forward price to adjusted funds from operations ratio of 17.8. Major competitors to STOR have cash flow multiples at well over 20. This is the only REIT in the $300 billion common stock portfolio managed by Warren Buffett within his conglomerate Berkshire Hathaway. If you want to invest alongside Buffett, this REIT should definitely be on your radar, if not in your portfolio. Last but not least, let's dig into the dividend increase that was announced by Fifth Third Bancorp, stock ticker FITB. Fifth Third just increased their dividend by 11.1%. A double-digit boost in your passive dividend income for sitting on your hands and simply not selling shares. That's so easy, even I can do it. How easy or common is it to get a double-digit pay raise from your boss at your day job? I'd say not easy and uncommon, but as a shareholder, both easy and common. The regional bank has now increased its dividend for 11 consecutive years. Banks have had a tough go of it over the last decade. Tons of regulation, low interest rates, trying to grow out of the Great Recession, and then the pandemic. They can't catch a break. Yet Fifth Third has increased its dividend for 11 consecutive years anyway. Their 5-year dividend growth rate is 15.1%, so it's not a surprise to get a double-digit dividend increase right now. And while this increase was already pre-announced a while back, they've made it official with the actual dividend declaration. With the payout ratio at only 35.0%, the dividend is in a position to keep growing nicely for years to come. Plus, you're getting a market-beating yield of 3% while that growth unfolds. This stock is up 45% year to date, but I think the valuation remains attractive. Bank stocks were so beat up last year that even big runs this year have left many of them still looking somewhat inexpensive. I actually highlighted this stock with a full analysis and valuation video back in early August, concluding that shares have an estimated intrinsic value of slightly under $42 per share. With shares currently trading hands for about $39.50 each, and with the price-to-earnings ratio at just 11.5, I see a lot of potential upside here. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.